You folks rolled out late last week, a very interesting report, and I'm still digesting the executive summary, almost 20 pages, and I don't know how you folks had all the time and resources to write an executive summary about 20 pages. But on page 7, this is about the fixed income market, and you folks talk about paucity of supply of instruments in the fixed income market. So let's switch this to the corporate side of the conversation. Do you think we would likely to see more corporate bonds in Naira corporate bonds in our market for the rest of the year? I'm looking for strategies and what will be the multivitamins for anyone appetite to come to the market and say, I'm a corporate. I think this is a good time to swim while the tide is high.
Yes, so if you go back to our first report that we launched at the start of the year in January, based on market conditions at the time, and considering the fact that we had seen the change in debt structure strategy from the government tilting towards foreign borrowings as opposed to domestic borrowings, we believe this would create an opportunity for corporates to then approach the market, because the crowding out effect that had hitherto existed had somewhat reduced, so we could see some corporates come into the market to issue instruments. But with the recent increase that we started to see in yields in the market, we do not believe it would be that attractive for corporates to approach the market. On the contrary, what we've seen in the first half of the year has been an increased issuance of commercial papers. So as opposed to taking credit lines from banks, which are about over 20% thereabout, we've seen a lot of corporates approach the market, issue commercial papers.
Is commercial papers the new in thing?
Well,
Dangote is just in there with a 150 billion program.
In the first half of the year, we saw
a sidestepping debt, sidestepping equity, or bank cash. So you just go for commercial papers to sort out whatever your financial shortfall is.
Yes. So for that short-term capital raise, we've seen a lot of these corporates approach the market for commercial paper issuances, and currently you have probably an average rate of about 15.3% thereabout, which is just about a 2 to 3% spread between treasury bills. And this is more
how much lower than a normal?
Much lower than what you get from much lower than what you get from a bank. And for us, we believe this is going to be sustained in the second half of the year.
Who's picking up commercial paper?
Well, there are investors that are the institutional investors buying into these instruments as well in the market.
In your report, you talked about also a double-faced strategy to trade or chase the yield curve for the second half of the year. Or what is the phase 1 and phase 2?
Well, so on the one hand, you have a case for CBN to ease in line with their guidance.
What if central bank does not ease?
Well, so we don't actually expect them to ease. So for us, we believe there should be a play at both the shorter end of the curve and at longer end of the curve, so that you don't miss out on any of the potential opportunities. So what we started...
Make it simple. Let's make it simple. If I have 100,000 and I'm coming into the market, into the fixed income, and I'm looking at the yield curve, still double digit, I was getting over my head towards the end of last year, looking at a single-digit treasury bills for, it doesn't look like that is going to happen anytime soon again. I think things have since moved back up. So if I have 100,000 and I'm putting that on the table, and I want to split it into your, what you call the two-phase strategy, how do I play with 100,000?
So we believe you could...
Naira, not dollars. Just in case anyone is watching, I think I have $100,000.
No, but we're sure you probably have $100,000 somewhere. But you know, you can split it.
The tax man is watching.
We advise a split between short end and longer end, like I mentioned.
Of the yield curve.
Yeah, so put in a certain proportion in short-term instrument. You could do a 50-50 split, for instance, because we're also seeing yields trend higher at longer end of the curve. So in terms of
if I buy long-dated instruments, which are treasury bills of 2034, 2037.
Yeah, and then the shorter term instrument. I mean, with 100,000 playing in the bonds market is going to be next to impossible. I mean, with 100,000 now. So yeah, for those shorter tenured instruments.
There's a market here for those of us who are the
But
bottom of the pyramid.
you can play in the savings bond space. But in terms
What's my rate?
But in, maybe about 11-12% thereabout. But you might as well just put the money in a 365-day treasury bill, for instance.
Yeah.
But I mean, for more retail investors who have little funds, with as low as 5,000, you can play in the savings bond space. So maybe that's another opportunity they can take advantage of.
Yeah, well, that looks like I was thinking about commercial papers. Then I noticed that commercial papers, the lot sizes.
Yeah, huge
way out
sizes.
of this world.
Huge sizes.
15%, that looks much better than the savings Naira bond, monthly Naira bond.
Yeah, I mean it's higher than that. But going back to your case of having 100,000, regardless of how much you have, if you approach us, AfroInvest, we'll be able to find that investment opportunity for you to take advantage.
You folks are going to make money, so you're going to find a way. I thought you're going to return my 100,000, and I'm just going to the guy next door. But again, that's not commercial, really. But again, the market's going to look really interesting moving forward. It's going to be a little bit quiet as we get to everybody talking about politics. I think some folks are going to get a little bit jittery. I don't want to use the word scared, but at least a little bit concerned about where we're going and pile a bit of their money. Even when government is a continuum, and it's going to like to be a change of government, or you have a continuum of the current administration, folks want to put some money away somewhere, somehow, not under the pillow.
Well, I mean, for any investor who has a more shorter term investment horizon, we believe they'll probably still play at the shorter end of the fixed income markets, because if you even look at the outlook on the equities at the moment, gains are expected to be somewhat lower than what we've had in recent months. So we believe that's where investors will stay. But for those with a longer view on the market, then you can take advantage of longer tenured instruments.
Do you think the fixed income needs some multivitamins?
Well, I mean, the CBN has.
Well, equities need some vitamins, but do you think fixed income?
Well, if it's in terms of liquidity, I mean, we've seen the CBN continue with its mop-ups in the market, trying to reduce system liquidity. But at the same time, we've also had maturities come into the market. So we've sort of had this offsetting each other in the market.
Okay. We'll have a bigger conversation around managing market liquidity at this point in time, sometime in the future. Thank you very much.
Thank you.
And good morning. Thanks for coming through, having a great day. Eromosele Aziba, one of the investment analysts at AfroInvest.